In today's video, I'm going to teach you about Morningstar Review Update 2025 and help you determine if it's still worth it for stock research. Let's dive a bit deeper into what Morningstar actually is. Morningstar is a major provider of investment research, data, and analytics. It's particularly known for its comprehensive tools like fair value estimates, economic moat ratings, and star ratings. This platform covers an extensive array of financial instruments such as stocks, mutual funds, ETFs, and bonds. Moreover, it offers tools for portfolio analysis, investment screening, and fund comparisons. They provide a subscription-based service known as Morningstar Investor or Premium, which offers more thorough analysis than its free tiers. Now, what's new or changing with Morningstar in 2025? Well, one notable update is their acquisition of the Center for Research in Security Prices from the University of Chicago, which now allows them access to deeper historical stock market data and indexes. Financially, Morningstar's revenue has been on the rise, particularly within their data and analytics and ESG credit ratings segments. However, they do face challenges like rising costs related to technology and compensation, as well as competition pressures, with some clients choosing to conduct research in-house and facing regional challenges. Morningstar's strengths remain substantial. Their breadth and depth of fundamental data are impressive, covering a vast number of stocks and funds globally, which is very beneficial for long-term fundamental investors. Their independence and established reputation continue to hold considerable weight in the investment community. Research tools provided by Morningstar are still seen as highly useful, offering robust portfolio analysis, investment screening, and comparison capabilities. Additionally, their growing ESG and data products are becoming increasingly relevant as interest in responsible investing continues to grow. However, Morningstar is not without limitations. The platform may not be ideal for very active or trading-focused investors, as it lacks real-time data and rapid updates characteristic of high-frequency trading. Moreover, their subscription fees are on the higher side, and whether you get value for your money depends on how frequently you use their premium features. There are also coverage gaps and slow updates in some areas, notably with non-US stocks. Compounding these issues is the competition, with rivals offering tools or data that sometimes surpass what Morningstar provides. Also, the company's high fixed costs and operational risks add to its challenges, especially during slower growth periods. So, who would benefit most from Morningstar? The platform makes the most sense for long-term or buy-and-hold investors focused on valuation and long-term prospects, fund and ETF investors comparing options, individuals seeking reliable, well-researched fundamental data with ESG information, and portfolio managers or advisors needing deep data and comparative tools. Conversely, it's less suited for short-term traders, those on tight budgets who might not maximize the use of premium tools, and individuals focused on international or emerging markets. Is Morningstar still worth it in 2025? For many investors, yes. It depends on your investment style and needs. Should you use Morningstar extensively, particularly their premium tools, it's likely worth the investment. However, if your approach is more active, technical, or currently reliant on free tools, you might find less benefit from going full premium. Evaluate your investing objectives and available alternatives before deciding if Morningstar aligns with your needs.